Hey, welcome to this live. My name is Maciek Zaremba. I work for Keller Williams, and I am here to answer some questions that I received from a couple of my clients. So, first of all, we have the question about first-time homebuyer programs. That's the whole stream here. So let me go over some of the options that we have as a first-time homebuyer and what exactly it is that you have as options. There's a little bit of free money, there's a little bit of low down payments, and so on. Give me just 1 second. Gonna adjust my audio here. All right, perfect. So here we are. So first of all, let's talk about what does it mean to be a first-time home buyer. It's actually not a person who is a first-time home buyer, believe it or not. A first-time home buyer is almost all of these programs have the same definition, and that's somebody who does not have any ownership interest in a primary residence for the last 3 years. So yes, you can have an investment property. Yes, you can have, multifamily, you can have anything, just no primary ownership interest in a primary residence. So if you live, let's just say with your parents, but you do own some real estate, that qualifies. Or if you owned maybe 4 years ago and you sold, and now for 3 years, 4 years you've been renting, that also qualifies. So you would be a first-time homebuyer according to that definition. And let's talk about what is just conventional loan, right? Which is just a regular loan, nothing special. There is one big benefit if you are a first time qualify as a first time home buyer. That benefit is a 3% down payment. That's the lowest down payment out there, except for VA. I'll talk about that in a moment. But basically, 3% down payment is the minimum requirement if you are considered a first time home buyer, according to that definition I just gave you. Now, keep in mind that your credit score matters here because the word you can never buy a property with under a 580 credit score using a conventional loan. So try to bump that up. Try to work on that. Get it up to like a 620 minimum. But ideally, you will really want to work through that and bring it up to a 680 or higher FICO score. And if you use, Credit Karma or Credit Sesame to track your credit and your credit score, know that that's a Vantage score, not a FICO score. So there is a difference there. It's very similar. So if you have a credit card, you can check. A lot of times they give you a free credit reports check once per, month or something like that, where they'll update your score. So 3% down is the program that Fannie Mae and Freddie Mac offers to first-time home buyers. It's a great program because you can pretty much get into a house, get into home ownership with 3% plus a little bit of closing costs. And we can ask for seller concessions as a buyer. You write the offer. So you have the option, or your agent, right, or helps write it for you. And I am an agent, so call me if you want to buy something in Florida. But you have the offer terms that you write, and then they can accept, deny, or counter offer, right? Next thing is, you need to make sure you have a good ability to repay. Now, this is with any loan whatsoever. This isn't specific to first-time homebuyer programs or anything like that. You need to have income. Now, does that mean you need to have 2 years of perfect tax returns? Does that mean you need to be a W-2 employee? Can you do it with a 1099 if you're self-employed or something like that? The answer is it depends, because that's the truth. It really does depend. So if you want to check more, just give me a call. My number's on the screen there, 941-888-SOLD. That's not a texting number. That's just a calling number. So you can call me and we can discuss what's going on, although I won't answer it during this live. So now next thing is you need to have a reliable work history. That's really the what the bank is looking for is your credit worthiness and your ability to repay. And you need to show a consistent history of earning money. So let's talk about, what if you're a waiter or a waitress and you get a lot of cash money and you just get that cash and you spend it. You know, in our phone conversation, I'm highly going to recommend you pay taxes on that money because that shows the banks that you have an actual existing work history, right? Um, you also need your down payment. You need your 3%. So you need to have that money as well. Now let's talk about the next one. So the next program, the first one, here is the first time home buyer program, 3% down. The second one is a down payment assistance program. So it's just what it sounds like. It's a program, and you do have to be a first time home buyer for it. It's a program where they will give you or lend you, grant you maybe some down payment money. So that 3% that I was talking about, you might be able to get some of that. So these programs change too. So right now we're in January 2023, and if you watch this 4 years from now, there might be a different program. So this program here is interesting. First, you need to do a little quick online course. Now, some people say it's like a Mickey Mouse course, easy to do, just common sense information. Some people learn something through it. So either way, it's required. You have to do it. You have to have your certificate of completion to go for this loan. Okay. But once you do, here's the benefit. First of all, $10,000 is today's dollar amount that they are going to make available to you. Okay, so the reason I said it that way is because it's not about 3% or 4%. It's about a dollar amount. Now it used to be 7,500, not even a year ago. So they bumped that up by $2,500. And you in this program, the way it works is they don't give you the cash, they don't give you the money. It's part of the closing process, and it's actually a second mortgage on your property. But this mortgage is a 30-year amortized deferred mortgage. No payment, no interest, nothing. So you get a $10,000 loan. It's a second mortgage, second loan. And that loan has to be repaid at the end of your 30 years of home ownership. And then there's a few other exceptions. If you move out of your house, you're no longer your primary residence, that second mortgage is due to be repaid. Also, if you refinance your property, well, that's going to be a lien, and that's going to need to be repaid. And if you pay off the 30-year mortgage that you had, then you have to pay the second mortgage as well. Or if you sell your house, obviously, when you sell your house, all liens get cleared, so that would be repaid. But keep in mind that if you live in the house for 15 years and you never actually pay down, you never refinance or anything, then that amount that you are paying back, the $10,000, is going to be actually less dollars. I mean, it's going to be the same amount of dollar value, but keep in mind that we have inflation. So every year your dollar is worth a little bit less. And this year, it's a lot less, right? We're about 7-8% inflation. So that $10,000 that you are getting as a loan is going to be repaid with a different value to the dollar, even though it's the same dollar amount. And you can always pay it off, right? You can do that as well. This thing is basically between 3 and 5% of the purchase price of the home. So you can't buy, $1 million property with this down payment assistance program. But there is a huge benefit is that there's a couple of these programs, but one of them, it's forgivable after 5 years. So every year, they reduce it by 20%. Not every down payment assistance program does this, but there's a few that do. So, reach out to me or reach out to my lender, and I can put you guys in touch to talk about what are the options for a down payment assistance. So if you want to buy a house and you're a first-time home buyer, as defined, that you don't have any ownership interest in a primary residence, then this might be a good option if you don't have all the money for the down payment or all the closing costs and so on. If you have $5,000-7,000 and you want to buy a property that you're going to live and occupy, then we might be in business. I mean, give me a call, 941-888-SOLD. We can talk about that. What's next? Next is The other thing you can do is in these down payment assistance programs, right? You can get up to 3% of your closing costs paid by the seller. So when it comes to the total amount out of pocket that you need, right? On a conventional loan, you're going to need usually, your down payment plus an extra 3-4% of the purchase price as closing costs. These ones here, you can ask, any offer actually, you can ask for the seller to pay part of your closing costs. So there is a pretty good option to get into home ownership without having much money. But you need to work all angles. You need to have the seller contribute a little bit. And right now we're in a market where sellers are contributing concessions. You need to get a down payment assistance, and then you need to have a little bit of cash also. And you definitely need some cash. If you don't have at least $2,500, then save money, because there's going to be an appraisal fee, there's going to be an inspection fee, there's going to be your down payment, like your earnest money deposit is what I mean by that. That is at least $1,000, hopefully 2 or 3,000. So you do need some money to get started into home ownership. And also, a lot of people are thinking about condos because they're cheaper in our area, right? But condos need to be approved by these programs too. So a condo gets reviewed, their docs, their financials get reviewed, and it's important to have all of this in line ahead of time. And a lot of condos are not organized enough to provide this to us agents as we begin this loan process. So I just recommend, try to stay away from condos and townhouses and villas. Try to stick with a single family home for these types of purchases. Now, the next one is if you are a veteran, and you probably already know this because they do a lot of education to veterans about the benefits of being a veteran. But as a veteran, this is not a down payment assistance program. This is a VA loan. And VA loans are amazing. You can have up to 100% financing. So no money down. And you can still have the seller pay for a lot of your closing costs. And at the end of the day, you can get into home ownership for very, very little money. Now, I've done quite a few VA loans, and every single time I do, I'm just shocked at how little the buyers put money into the deal, right? Into home ownership. Now, thank you, veterans, for serving our country and putting your life at risk. This is one of the rewards that you get, and I can help guide you through this process too, to show you what are all the benefits. Now, another one on for disabled veterans is your property taxes get significantly reduced. Now, there's a lot more to it than just that statement, but I've had 2 clients in the last year that had a significantly reduced amount of taxes, their property taxes, because they're a disabled veteran. So the VA loan is the third program that I wanted to discuss that allows you to get into home ownership with almost no money out of pocket. Now, it's not a first time homebuyer program, but you can only have one VA loan at a time. So if you already have a property that you got a VA loan on, you can't. Okay, I shouldn't say you can't, because there are exceptions to almost every rule. But the probability of you being able to get a second VA loan without refinancing this out of a VA loan, or meeting all the exceptions, is pretty low. So, but there might be a chance there. So also call me if you do have a VA loan and you want to, you're moving to Florida or something. You want to see if you have any options like that. Just reach out to me. So now, next thing is, and last thing is, the Hometown Heroes program. So the Hometown Heroes program is really awesome. It is a program that's designed for our hometown heroes. So who is that? I can post a concise list of who qualifies for this, but basically we have our doctors, our police officers, our state troopers, our teachers, our firefighters, and so on. Now, I did a loan like this for Pilot. Pilot is a firefighter locally, and he and I'm sorry. Let me go back to the program. And this program allows the Hometown Heroes to get up to $25,000. That's a lot of money towards down payment and closing costs. So once again, we can tee up this deal, this offer with, hey, we have a Hometown Heroes program and we would like a little bit of seller concessions. And at the end of the day, you might end up with a pretty decent house for no money out of pocket or very little money out of pocket. Now, another thing about the Hometown Heroes program is it has other benefits. And one of the benefits is no mortgage insurance. So, and all these rules can change at any point in time. So don't hold me to any of this. And I'm not a lender anyway. I'm a real estate agent who's extremely familiar with all the loan programs or most of the loan programs. And having no mortgage insurance on a really low down payment is also a big benefit. Save 150 bucks a month, right? So that is a really, really good program. And these can also all be mixed in with an FHA loan. So this is just a little side segment I wanted to talk about. FHA loans are not first-time homebuyer programs. That is a common misconception, but they do have a lot of benefits. So FHA is a 3.5% down loan, minimum 3.5% down. You can put 5, you could put 10, you could put 15, right? It does have mortgage insurance. It does have a 30-year amortization schedule. And FHA is how I started investing in real estate or buying real estate. It was my primary residence. It was not an investment. And I bought a property, 20 years ago or so, with a 3.5% down payment. It was actually only $1,600 out of pocket because it was $52,500, and I had most of my closing costs paid by the seller. And I just want to say thank you to Maurice Chevalier, who was my first real estate agent before I got licensed. I got licensed about 4 years after that. And he helped guide me through this process. And, I was 22, 21 or something like that. So if you are a young person, don't think it's not possible for you to get a really good program. You just need a really good agent that knows exactly how to structure your deal. So please feel free to reach out to me, 941-888-SOLD. You could also email me. My email address is sarasota@sarasota.com. So that's 3 Sarasotas total. So FHA is an excellent program. It's the Federal Housing Authority that it's a federal thing. They provide a lot of money for FHA loans, and it is an excellent program for first-time homebuyers, although it is not exclusive to first-time homebuyers or anything like that. Anyone can go and get an FHA loan or apply for an FHA loan, and then as long as you meet the criteria. But it is a great intro level program because it has a 3.5% down payment. So that is an FHA loan. I've done a lot of FHA loans, so please call me also if you are interested in that. And lastly, let's just talk about your debt to income ratio. Every single program I just talked about, every single loan for a home is going to look at your debt to income ratio. And in a nutshell, here's what this means. What are your debts? Your credit card payment, your car payment, your rent, your mortgage. Maybe you have some revolving account, like some martial art, payments or something like that. Whatever your credit report is reporting as your monthly obligations, your monthly payments, and then your income, that should be a lot higher. Okay, your debt to income ratio. So what is that ratio? This is something that is very important, and you want to keep it as low as possible. And the easiest way to do that is to lower your debts, okay? It's a little harder to increase your income sometimes, okay? Especially consistently, to prove it to a bank that you are a consistent earner of this higher dollar amount. But debts can be reduced. There's things like consolidation loans. There's all types of stuff, but I don't recommend those right away, okay? But there are options to reduce your debt. And it's not about your total debt owed, it's your monthly payment. Okay. So I always recommend Keep your debts as low as possible, the debts that are being reported on your credit report. And the biggest impact for most people that I end up dealing with is a car loan. Okay, so everyone wants to look good in a car. It is one of the biggest mistakes that people make by buying a car that is, nice and extravagant. Of course, it's you need a reliable transportation. I understand that, but as a rule of thumb, try to keep the loan as low as possible and the payment as low as possible. If you do have to get a car loan, or if you do already have one, okay, because this affects your debt to income ratio significantly. A lot of people I know have eight, $900, maybe $1,000 car payments, and that directly hurts how much you can borrow. Right, $1,000 payment is $1,000 less that you can afford on your mortgage. So the bank looks at all of that. So I just want to say, let's talk about this, right? Because I also help people fix their credit. I have like a half hour to a 1 hour session of sitting down, looking at your credit karma and looking at your credit report and making a plan of action. And then once a month following up with you. Did you do what you said you were going to do? Right now, very few people take me up on this, but I have helped a few people really improve their credit score and then get them into home ownership, because a lot of people look at their credit score and they say, I'm never going to buy a house. I got a 610 credit score. You said I need at least a 620 or 680. That's going to take forever. No, it's not. It's not going to take forever. It's going to be quick. By quick, I mean less than 2 years. We can get your credit score and all your tax returns aligned properly to get you into home ownership. I love helping people owning homes, right? Yes, I get compensated by selling the house, but please don't, talk to a professional. Basically, call me, talk to me, because you don't know what I know. And I've been in this business almost 20 years, and I sell homes, I invest into real estate, I obviously own my own home. So I am definitely knowledgeable to help you and try to figure out how can you get into home ownership. So let me just see if we have questions. All right. It's my first time streaming, so maybe I'm doing something wrong, but there are no questions from the live streams. So thanks so much for listening in. And I'm doing these once per week minimum, possibly twice per week. I might throw in one on a weekend once in a while. So please email me, text me, send me your questions on this re-recording, and I'll address it on the next one. Thanks so much, everyone.